Hi traders, I want to give you some information here to help you understand the Japanese yen. Now, the Japanese yen has a number of drivers. First of all, it's a risk-off currency. So when markets are worried, they buy the yen. The yen is seen as a very safe, stable government, and investors are happy to put their funds into the yen, and Japanese investors will often repatriate their investments from overseas back home. So when people are worried about the rest of the world, there's big inflows into the yen. So that's why I see the yen spike up when there's ever a big risk off or a big emergency or geopolitical concern that hits the market. But there's some other drivers of the yen that I want you to be aware of. The other major driver is the moves in US yields. Now, if you take a look here in the US 10-year yield, when you see the US 10-year yield rising, you see the yen weakening. When you see the US 10-year yield falling, you see the yen strengthen. Notice this relationship. Rising US 10-year yield, that's the green line. Falling yen. This candlestick chart is the yen index, right? So when you've got falling US 10-year yields, right, the yen strengthens. When you've got rising US 10-year yields, the yen weakens. Now, there is something called the carry trade, which is when investors have been very happy to hold the Japanese yen against a high yielding currency, something like the US dollar or the Aussie dollar. And that carry trade is because the Bank of Japan has kept interest rates so low for so long. That's now changing. There's this unwinding of the carry trade. So there's another driver of the yen I want you to be aware of, and that's oil prices. Now I'm overlaying oil prices here in the yellow. And you can see here, right, when you have, now Japan is a net importer of energy. So when you have energy prices rising here, you see energy rising, the yen falls. When you see energy prices falling, right, the yen strengthens. So rising energy prices, okay, falling yen. Rising energy prices, that's the yellow line, falling yen. Now when you put these two together, the US 10-year yields and oil prices and the yen as an index, when you see these moving together, this is when you can get some great moves in the yen. So let me give you an example. So here's a really good one, right? You've got oil prices falling and US 10-year yields falling. So when you've got them falling together, falling US 10-year yields, falling energy prices, look, that strengthens the yen. And look here in 2020 to 2022, had a really good example where the yen was really elevated, very strong, and then we had oil prices and 10-year yields rising from those COVID lows. And look, as they rose, 10-year yields rising, oil prices rising, the yen fell. So they're the main drivers of the yen. Now I'm going to be creating a course, especially for VIP members.
From India's trade minister, the nation does to increase exports of autos, electronics, and machinery to Russia.
Outlining this in more detail. This is just a taster, but you can see when you can understand these correlations, and when you can say, oh, hang on, I know I'm in an environment when oil prices, are rising and yet 10-year yields are rising, you've got a really good situation where you're expecting yen weakness. And it's the opposite as well. When you see, US 10-year yields falling, right? And you can see oil prices falling, that's a really good opportunity for yen strength, right? Falling US 10-year yields, falling oil prices, yen strength. And understanding these dynamics can really help with big swing positional trades. I'm going to be updating the VIP channel with a course outlining this in much more detail, but I just want to give you a taste of the kind of insights that will be available.